So these are the week 34 results as of the 20th of March 2021. I'm titling this week's trading week as Square One again. So through Wednesday, it looked like I was going to be within striking distance of closing my big concentrated trade and getting back onto the normal Operation Archangel strategy. And then Thursday and Friday, the NASDAQ reversed, and basically the 5.5% I made up last week evaporated. So hence Square One. The growth thus far after 34 weeks is 14.45%. You'll see next to the starting budget and current value that I have added a little bit less than $400 to Operation Archangel. Now that's a function of I trade Operation Archangel in my IRA, so I am making my annual contributions into the IRA now. As time goes, I'll actually move those contributions out of the strategy into my long-term IRA holdings. But to start out with, I'm going to keep them in Operation Archangel for at least one, if not two, full strategy evolutions, and then just take out the 6,000 principal and move that into the long-term holdings. So as of now, for this week, only one closed trade, and that was SRPT. That timed out at 60 days, actually 62. I missed the 60 days, so I closed it at 62 days, negative $230.65. Now, out of my other holdings that I presently have, I have one that is about 2 weeks away from timing out, and then all the rest are about halfway. So most all the rest of the holdings are at about 30 days or less. So if the market doesn't turn dramatically in the next month or so, I'm going to start getting timed out of a lot of holdings. So hopefully it does turn around. The present weakness in the Nasdaq is being explained away as related to concerns over rises in interest rates. Now, those rates have a possibility of being forced down by Operation Twist, possibly from the Federal Reserve, other market forces, or market action could turn around and start disregarding the rise in interest rates. It's hard to tell. One thing is certain, and this is brought up in a recent video by Patrick Boyle, is that hedge funds are less active in the in tech stocks right now because they are more preoccupied with a basically risk-free trade strategy that they are using with SPACs. I would recommend a video by Patrick Boyle published this week titled "The Next Hedge Fund Scandal." That explains in very good detail what the hedge funds are actually doing with SPACs right now and why a lot of their liquidity has been sucked out of the NASDAQ. Now, whether that is going to change anytime in the near term is hard to tell, probably very unlikely. But what is possible is that other market participants could take up the mantle of the NASDAQ stocks and kind of bail me out of the concentrated trade that I'm in now. Also, the hugest portion of my IRA contribution for 2020 is going to be coming into Operation Archangel in the next week. So that's going to allow me to average down my concentrated holding and be able to get out of it at a profit much lower than I would have to get out now at the same profit. So very likely I'll be out of this concentrated trade within the next week to 2 weeks max, hopefully, if there isn't some kind of max pain event in the NASDAQ within the next 2 weeks. So fingers crossed on that. As far as the other metrics you see here, nothing has moved very much. The Intel list is basically holding up. I only have one Intel list now that's still active, and it hasn't moved dramatically over the course of the last month, either up or down. So I would say about 50% of the positions got closed before the big NASDAQ market downturn. So that is basically where that Intel list is holding. So you're not seeing a lot of movement in the cumulative results there for the Intel lists. And this is where we're at. So hopefully Operation Archangel will be back on its normal tactical footing within the next week to 2 weeks max. I hope you have a great day, and I'll talk to you soon. Bye.